So we had our first negative 1% day in the stock market for the first time in almost 2 months. The market dropped 1.2% last Friday, and there are a ton of things that you need to watch out for this week. But if you watched my last Sunday video, I told you that I was starting a position in MRAM. I honestly expected this position to take a little bit longer to play out than it did. However, we were up 160% on this position within just a single week. MRAM's market cap went from $400 million to over $1 billion, so I closed that position up 160% on MRAM and locked in that cold cash. However, I am going to give you a complete blueprint here as to how to tackle the market going forward. This is everything that you need to watch out for this week and how to take advantage of it from a trading and investing perspective. We are coming up on a historically bearish time frame for equities. From May to October in midterm election years, the market tends to see a correction. The average correction during this specific period is minus 10 to 12%. However, I want you guys to recognize something very important here. There are no historical years here ending in 6 included in that specific bearish data. So 1986 as well as 2006. Those years ending in 6 were actually positive. And obviously right now in 2026, we have a year ending in 6. That is a very small sample size, but historically May to October in midterm election years tend to be pretty bearish timeframes. Now, although we have a new Fed chair that is supposed to start soon, the timeline is messy. The Fed named Jerome Powell as chair pro tempore until Kevin Warsh is officially sworn in, and there is no concrete date for Warsh being sworn in yet, although I believe he was already confirmed by Congress. So the swearing-in date has not been set in stone yet by the administration, and Powell will remain basically the de facto Fed chair until we have that official swearing-in ceremony. But I shared with you guys before that we also tend to see a market pullback during the first few months of a new Fed chair. The market historically tends to test the new Fed chair to see how they react to volatility. There was also a high-profile summit between China and the U.S. last week, and China said that it reached a tentative agreement with the U.S. on some tariff reductions and trade cooperation. They did this by committing to buy more commercial airplanes from U.S. companies, but they also said that even though the U.S. allowed them to buy the high-end H200 chips from NVIDIA, they are not going to buy them. They openly claim that they simply don't need them for their current technology infrastructure. I don't know if that is just political grandstanding or what is actually happening behind the scenes. And speaking of NVIDIA, we do have NVIDIA earnings on Wednesday after the closing bell. Now, I believe that they going to beat earnings and they going to beat revenue expectations. It will likely be another record-breaking quarter for them, but obviously everyone's going to be focusing strictly on guidance. We also have the massive SpaceX IPO coming down the line, but that is happening later. Now, in terms of how to trade this specific environment, I told you guys about using the 9 and 21 EMA street strategy. You want to apply the 9 and 21 EMA to the hot AI buildout stocks. And I previously gave you a short list of some AI buildout stocks to watch. However, I have a complete list for you of all of the stocks that I am currently tracking from an AI buildout perspective. You can get the whole list if you just click the link in the description below this video. I will send you the entire PDF absolutely free of charge. So make sure you click the link and I'll send you the PDF of the complete list of AI buildout stocks. But as I said, you can actively trade these high momentum names directly from the 9 and 21 EMA lines. And if you actually followed that tip here was ALY, for instance, which is a key photonic stock. And you could see that from the 9 and 21 EMA bounce just last week, it went up 53%. Same exact thing happened for Light, which is Lumentum Holdings. If you followed that tip from the last video, Lumentum Holdings was up 21% in a flash. And the list goes on and on with identical technical setups. Coherent, which is another major photonic stock, did the exact same thing, jumping aggressively directly from the 9 and 21 EMA level. And as I said before, you want to take advantage of this strong trend until the trend is no more. I don't care what the broader statistics say about midterm election years being bearish. A lot of these specific infrastructure stocks are not even in the SP 500 or the NASDAQ index, but as I said, I think that the current market cycle is focusing heavily on photonics and data centers. Nibius also made an all-time high again last week, bouncing perfectly off the 9 and 21 EMA. Now, if this specific technical trend breaks, then yes, you stop doing this immediately because the trend is your friend until the very end. But when this trend officially breaks, then you know that is the time to let your foot off the gas a little bit on this strategy. With the AI build-out stocks, we might be also seeing a quiet rotation into the software sector because IGV, which is the major tech software ETF, is up a quiet 25% since the 10th of April, and I did a whole extensive write-up on ServiceNow as well, sharing my complete thesis for investment, looking closely at their free cash flows using AlphaScope software. Obviously looking at their cash from operations, looking at their EBITDA, and looking at their revenue growth. These fundamental charts all look like textbook, perfectly linear graphs. It almost looks too good to be true for a public company, but ServiceNow is a high-quality company that is growing by all of the important metrics that you want to see. They are growing at a very consistent and predictable pace. Shout out to AlphaScope for making those fundamental numbers so easy to analyze. Signups for the platform are now open at the introductory rate of $19 a month. It drops to $16 and change if you choose to bill it annually, but at some point in the near future, the prices will be going up significantly. So make sure that you lock in that low rate if you want to take advantage of the best fundamental tool in the market. But could we be seeing a major rotation into software as Microsoft also looks like it wants to break out? Although it did drop a little bit after hours on Friday when it was announced that Bill Gates had sold all his remaining position. To me personally, that headline is a total non-issue. Bill Gates sold the vast majority of his stock a long time ago. And he actually missed the historic opportunity to become a trillionaire because of selling most of his Microsoft stock too early. He sold way before this massive pump to the mid-500s. So for me, Bill Gates selling his last tiny bit of shares is something I don't really care about. He already missed this entire AI pump on Microsoft and sold way too early in the grand scheme of things, missed out completely on a historic chance to become the world's first trillionaire. And if we do get a deeper market dip here, that is going to be an absolute gift for buyers because the S&P 500 is currently on a massive 7-week winning streak, and historically 52 weeks after a streak like this, the S&P 500 has never been in the red. Now, I am always 100% honest with you guys, and I openly tell you when I don't know something, but is the S&P 500 going to see a standard correction right here? I don't think that we were going to get a standard correction here just because people feel like it, but I do think that the market will likely be testing the new Fed leadership, especially after the first Fed meeting or two under the new regime. So I do think that we will see a real correction at some point later this year. I just don't know that the correction starts right now just because we had a single red candle last Friday, but if we do get a correction, that is 100% a viable buying opportunity for long-term investors. I think that the corporate AI build-out phase is still fairly early in the macro cycle. I think that there is still much more market euphoria to go before the music stops, and I think that the market will likely see a massive rotation into lagging things like software before there is a major bear market or a major systemic correction, maybe somewhere in 2027. I don't think that the final market top happens without these software stocks also flying to the moon. Now, crude oil is still hovering at stubborn levels above $101 a barrel. Obviously, the ongoing geopolitical issues around the Strait of Hormuz are not solved whatsoever, and this persistent energy cost issue to me does not bode well for the long-term economy at all. The market spending almost 2 months with crude oil hovering around $100 is a warning sign. To me, an economic recession is almost guaranteed at some point because of this severe energy tax. And we already started seeing the core CPI data come in at hot levels that we haven't seen since the pandemic. So CPI came in hot at 3.8%, which is the highest level we have seen since May of 2023. Core inflation also rose up to 2.8%, coming in above Wall Street expectations of 2.7%. And the absolute worst macroeconomic numbers of all were found in the PPI report. The producer price index surged ahead to a staggering 6%, well above expectations of 4.9%. We haven't seen production costs rising at these prices since January of 2023. Core PPI came in at 5.2%, coming in way above expectations of 4.3%. So the longer that this hot inflation sustains in the economy, obviously the Fed is not going to be able to cut rates. I don't think that this specific Fed is going to actively raise rates either, but the realistic chances of a rate raise are higher than a rate cut for sure because of this sticky data, and I think that the economic chickens will ultimately come home to roost possibly in 2027. So I do think that there is still more market euphoria left in the tank for 2026, and it is our immediate job to try to take advantage of that trading opportunity while it lasts. But I do think that the entire cycle will end badly at some point in 2027. So you are really going to have to play this current market environment very tightly. You are going to have to know exactly when to get out and when to put your foot on the gas. And if you want real-time access to all of my long-term analysis as well as my active swing trades, sign up trades. Like my MRAM position as well as the underlying data center stocks are all shared there. The link is available right in the description below this video. Go get yourself AlphaScope today. It is the absolute best fundamental analysis tool in my opinion. It will do absolute wonders for your portfolio and your structural ability to stock pick. It is only $19 a month or $16 and change if you sign up for the full year. And go ahead and grab that free PDF detailing all of the target stocks of the AI build out. I look forward to seeing you guys inside and in the next video. Stay safe out there on the charts, traders.